right, good morning, good evening, whenever you're watching this. Hello, everyone. Today, we're going to be doing a video going over chop zones and deriving our chop zones. So for today, I made sure to just get like a naked SPY chart. If you type in SPY, there's like the main SPY, and then there's this other one. So I'm using the other one. That's why I have like the decimal points like that. I figured, even though I'm using an old TradingView account, I just figured naked is the best way to see what I'm trying to teach today. So here, I pretty much have like, this is like out the 2-year range, rally off the October low. This is the 4-hour chart. But right now, I'm just going to start with how I determine these chop zones. So in general, we have, fib extensions, or sorry, not extensions, but we have fib retracements. And then, within this range, you have your different levels. From high to low gives you extensions, and then in between here you have retracement levels. This 38.28 retracement, for example, is not 38% from this high down, but it's rather 38% from this low up. So that's like a key thing that we remember as fibs. It's not just like a one-directional tool. You can use it both ways. And that's kind of the premise of the chop zones, is there are certain things that overlap within certain areas. So I think the big thing everyone is wondering about, especially as we come out of this rally and our recent retracement, is we have this gap, but particularly what's interesting, that 530 area, where on the daily we were consolidating, right? Got the engulfing, attempt to break back up, and then sell back down. In here you see a potential zigzag two-step. It looks pretty confusing. Like, this does not look like a ABC, This is kind of nasty, but it's there. So for today, I actually want to start with a trend-based fib. Simply this, off this low. I've shared the wave count, so you'll understand why these particular swing points matter to me. We know 786 key level, usually that first profit take. H, boom. 1276, 1618. Boom, 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 boom. 2.618, yeah, whatever. I'm actually gonna delete this, and then we're gonna run. So our trend-based fib, that was the blue. Then I'm just gonna do a regular fib retracement from their April low to the previous all-time high. Key areas would be that 382, and look, you have that confluence here. So what I'm gonna do is I'll draw it, and what I'll do is I'll change the color to like pink, but as you see, there's like an overlap there. So key area, I think under last Friday's low, that would be the next like chop zone. So now you're kind of seeing how the chop zones line up. Then we have this 236. Between this 236 and here, there's not much here, but key level, I'm just gonna draw it. This option H, awesome. And then lastly, I'm gonna do a range of here to here, 38.2% retrace. That for me is key on this new range from this new all-time high, so I'm gonna write that. I'll do these yellow. 236 right here. So we have this 0.5 here, similar here. Option H. And then what else could we do? We could do a higher time frame fib. So now we have this range we did this range, we did the extension from this range. Next we could look at this rally off the October low. It's hard, but you could see this range. Let's see if there's anything within this structure as far as up to extensions that match with what we're saying. Not much between 2.6 and 1.618. Interesting, right? Typically, what you can do in this situation is, because these are key levels, as you see, this 1.618 is typical profit taking, boom, you got hit with the profit take, broke above and held, and then you kind of get this structure, right? But in between here and here, we haven't touched up here, so how will we know? We haven't touched down here, how will we know? So what I like to do sometimes is actually run another fib in between. And at this point I'm gonna have to change the colors. And I did a low to high just because in the context of this, we know, okay, key areas are what? The 618 pullback of that range. We know deep retrace of the range, which also happened to hold on our last correction down to 494, even though we weren't sure that we had this. This is what I'm saying. You can kind of, it's like a fractal almost, right? So we have 236 up here. And we're getting a little more information now as far as like towards that 530. So option H, this one, we're gonna just go white. Beep, beep. And then we got that. And then lastly, we could just do, I mean, this range, unfortunately, this is what's so annoying about like the action we've had, is we've had our expanding megaphone, whatever, within this, right? Higher highs, higher low, or lower lows. But within this, there's not much clarity. So here, this is like pretty much what I would do. Like, as far as over 500, we know we had some key levels in here in this gap too that we just saw. But for me, it's like pretty clear. Chop zone, right in between here. Another chop zone, right in between here. And if you look, like, with the chop zones, it's hard to tell because, yeah, you could be distributive in here on to May 7th. And I bet there were probably stocks that sold on May 7th that continued above. And until they came into this, like, 521 area and broke and held, they were probably still weaker. And that's, like, kind of the edge that I talk about with the chop zones. Is like, you don't know. Sometimes it may try to break and continue. It may try to sell. But sometimes it can be a cumulative distributive energy. For this one up here, I would say you can also use the range of, you know, that high to the recent low. Unfortunately, like, that's not that many days of data. But if we do that, we see, you know, golden pocket of this new range. And that's like key, 38.2% as far as like sellers want to get a trend below. This would be key. So another chop zone, boom. We know that, and that lines up pretty much with like that previous all-time high idea. Okay, so we know that's in there. Between the 0.5 and here, this is like, I would consider this a chop zone actually, because what you have is, you have people that are looking at this retracement, right? And they're like 0.5, okay, underneath is a discount of the range. But at the same time, you're dealing with blue confluence level we had, the gap here, it's just not high probability confirmations either way. So it would be a chop zone, but it kind of is reminiscent of like what I talk about with like wider ranges, for example. So I'm just gonna change this one up to, just change up the colors because this is a little bit slightly different. So I'm gonna rock with that. Now under here, like within here, I would be looking at the candle bodies. So a big thing is the candle bodies. Option H. And actually for this, I'm going to change to a dotted line, bigger size, yellow. It's just so you see it's clear. So we're in the zone, top of the zone. Towards the top of it, you get the gaps, continuation fibs, whatnot. But if you were looking for a chop zone in here, relative to 530, we have this kind of choppy area, and then the candle bodies. Underneath those candle bodies, I would look for, we have this sell, and then within this daily candle, I'm just gonna use this and move this back up here. Within this daily candle, you have that golden pocket right here, right? So what I would look at is like golden pocket, option H. This is pretty much exactly how I do the chop zones. Option H, we're gonna go blue. I like the color blue. And then we're gonna bring it back down to this low. And we look, oh, look right there, 786, right by that range. Awesome. Chop zone, bang, bang. And then we have top of the megaphone, we have more wicks here, 531, and I think it was like, what was it? If we go back to this range, I think it was like 531.50. I said or not in this range, but you have 886, 532. That's not like too helpful. Another thing you could do though is what? You could do, a lot of people looking at this as a megaphone, so you have these previous highs and whatnot. So you could look for look above and fail. So from this range would be the swing high. And for me, a swing low would depend. Do we care more about the break and retest of this high? Okay, that didn't really happen until now on Friday. So I would look for a slightly lower in the range. Do we care more about this chop zone confluence that we can had at 518? I mean, under 519, we were hedging puts. So this would probably be, we weren't sure if this was a cumulative or distributive. So I would actually look at the swing low that we made right before there, the swing high there. And this will probably be like the last time I try to set it up for any confluences. Do I see anything above the range? No, I do not. Do I see anything in this range that might be like a clue, given that like not a lot of people would be looking at a range like this? You have this 0.5, okay, so be another one. Let's do like a teal. And then I would be like, okay, maybe this chop zone is like slightly wider. Okay. Then we have 618 here, 786 here. Okay. Maybe we have this wider range in between, but now we also know we have, you know, this in between here too. And I'll change the colors to reddish, pinkish situation. And that's pretty much what I've been looking at. So boom. And that's the chop zones coming into the week. That's it. And then if you look, it's like a little wider range. Chop zone up here. That includes 530. Then potential swing high choppiness in the 531. I said 531.50 would be like key for essentially like getting that higher part of the megaphone. Makes sense given what we see. Let me actually delete the fib because I don't need that. But this is like the roadmap of how I would do it. And that's pretty much it for today's video. Overall, I guess I could dive into some other things. SPY QQQ, I think, can remain strong. Like I've shared before, we do have our wave count. I'm not gonna really go over that or anything in the March video, but IWM in particular, and fuck it, I guess I will do it. Fuck it, I guess I will do it. You'll see me delete them live. Delete it live. I'll just hide it. We're still on this wider range, actually. And that's the thing. We had the profit target 534, and it was like a profit target and sell from when I hit it in pre-market, but we never tagged it in cash. So I guess that's one more thing I'd be worried about. And then we have 439.67. That's what I'd be looking at in the interim. We did have some like other megaphones and stuff like that. If I go to 30-minute, and just show you, we had this megaphone within the context of the rally. I think this is actually where I drew that fib from just now. But I was like, oh, let's see if we can finesse the ranges. But yeah, this megaphone. So high or low on 30-minute, above. Fucking A, bro. So yeah, high or low on the 30-minute, above this megaphone. Could provide something interesting as well. I know it's noisy for the fibs. It's just easier for me to do this and not have to delete everything every day. That's why we started with the other chart. But yeah, that's pretty much it. You got the new chop zones. You guys got pretty much the levels. You can see, fuck it, I'll share it. I'll share it. These are the levels. This is like the full symmetry of the measured move of like pretty much the whole correction, the 2-year range we had, just projected from that low, or not projected from that low, but if you look, we did this low to the cup and handle, and then when we were looking at the cup and handle, we were like, okay, what would be a measured move out of the cup and handle? And that's pretty much it. But yes, that is the charts. Hopefully they're helpful. I'll literally show you all the upside levels. Like I said, I'm pretty much setting up for if this is wave 1, wave 2, wave 3. I don't think this wave 3 is done, but within the context of like this structure, Bruh, it's so hard to read these with the lines sometimes. That's why I have to show you guys the other stuff. But what do you got? Wave 1, wave 2 pullback, wave 3, wave 4, wave 5, and then the wave 4 correction. And then on the weekly, that gives you the top, the local top rather, for this to give a pullback to give you the rest of your move, which should, in theory, be the size of wave 1. It's up to you if you think wave 1 is from that 2022 low to here, or if you think it's from like here to here. Typically wave 3 is longer. So we had what? We had 111 points on SPY. So if I do from our recent low and 111 points, that's actually so creepy. That's literally right there. It's creepy how it's literally right there. But yeah, that's pretty much it.